Hi and welcome to Poseidon Live. Today we are going to be asking a very, very important question. Is your business compliant? First of all, just to give you a bit of a background towards about Poseidon Live. So Poseidon Live is a broadcast that we broadcast every 2 weeks, and we address topics that are close to the heart of entrepreneurs to help them build better businesses. The important thing about these broadcasts is you get to ask questions in the comments on these videos, which we will address and answer, but you also get to make comments to suggest topics for our next video. In our previous videos, that is available on our YouTube channel as well as on our website and Facebook pages, you also see that sometimes we invite guests onto these broadcasts to have a bit of a discussion with them to help you answer the questions and topics that you would like us to talk about. Today we're going to have a one-on-one chat. It's just going to be you and me, and we're going to be compliances. Compliances is one of the things that can be very, very overwhelming at the end of the day. And that's what I want to try and demystify and make it a little bit more simple if I can. These are complicated topics, so I'm going to try my best to give you a basic overview of these things so that you know what it's all about, what are the different compliances that your business need to comply with, because a lot of these things entrepreneurs and business owners aren't even aware of. So the important thing to remember about these compliances as well, it's very important for you to have an accountant or a tax expert that can guide you through these, but as an entrepreneur it's important to understand what each compliance is all about. So the first one that I want to talk about is income tax. So income tax is one of the most complicated compliances of them all. To navigate the roads, especially when it comes to business income tax, and all the avenues and all the things regarding income tax can be quite a daunting task. So it's very important for you to have a good tax practitioner on your side to help you navigate these. So first of all, that you need to understand is, as a business owner, you are a provisional tax payer. So provisional tax is something that needs to happen 2 times a year. So it means that once your company or your business, if you're a sole practitioner or a sole proprietor, your financial year end is normally the same as the rest of the individuals. In other words, ending in February. If you have a company, you can select your financial year end. So how provisional tax work is 6 months after your starting date of your financial year, you need to do your first provisional tax. And then 12 months after the start of your financial year, you do your second provisional tax. And then you've also got an optional third submission that you can do, and that is 6 months after the year end of your financial year. So what the provisional tax is, it's basically an estimate of your profits and losses that you need to produce, and then you pay tax in advance so that your taxes is up to date and it incurs over a period instead of one big tax payment. Keeping in mind that these things are compulsory for all business owners. It doesn't matter whether you're a company or a sole proprietor. If you derive income from trade in any way, you are a provisional taxpayer. Then the company's income tax is at the end of the year. Just like people, normal persons, individuals, you need to do your actual tax submission, which we call the ITR 14, the income tax ITR 14. So this happens 12 months after your financial year end of your company, and basically the amounts that you have not paid during the provisional tax, the differences between that gets reconciled. They look at your financial statements that get submitted, and then you do your actual tax return, and here you can claim back or either pay in some extra money. The important thing to realize that is, if your forecasts on your provisional tax paid up to date is different, more than 10% different than the actual tax return, you get penalized for it. So it's very important to have your provisional tax sorted and to make that as close as possible than you can, to not sit with penalties and interest things at the end of the day. So the next topic that we're going to be discussing is value added tax, or VAT, or VAT. I'm sure that you've heard about this, and this is one of the most confusing topics, I think, when it comes to compliances. So it is compulsory to register for VAT if your business has an annual turnover of more than 1 million per year. You can also voluntarily register your business. If your business have derived income of more than 50,000 Rand, then you can voluntarily register for VAT or for VAT. So VAT works in two things. So you've got output VAT and you've got input VAT. Simply how it works is output are the things or the services that you deliver, the output that your company delivers. You charge your clients 15% VAT on that output, and input is the VAT that you pay. So in other words, it's supplies that you are buying, services that you are using to conduct your business. Those inputs you can claim back against the output that you've charged customers. So simply put, if I have 100 Rand worth of services and I charge my client 15% VAT, but I've incurred 20 Rand worth of expenses, the VAT that I've paid on that 20 Rand, I deduct that VAT from the amount that I've charged my client, and then I pay the difference over to SARS. The thing is that you need to understand is that you are not paying the VAT. It is your client or the end consumer that pays the VAT. If you're a business-to-business service provider, your client will actually not incur the VAT because they will claim it back again. If you provide a service or a product to the end consumer, then they will incur that VAT. So it's important to understand that it's actually a beneficial thing because you get to claim the input, but you're not really paying for the output. What it does do, though, is if you provide services to the end consumer, it can make your prices a little bit less competitive because now they need to pay that extra 15%. Also, a very important thing that you need to understand, if you're not a VAT vendor, you are by law not allowed to charge or claim VAT in any way or form. Only once you've got your VAT number can you put VAT on your invoices to clients. So the way that VAT works on the cycles is quite different from other things. So there's different type of cycles. You get monthly cycles, you get bi-monthly cycles, and then you get 6 monthly and yearly cycles. So depending on the type of business that you have, SARS will allocate a cycle to your business. The norm or the majority of people get a 2 monthly cycle, and these can be either Jan-Feb or it can be Feb-March. There's two different types of bi-monthly cycles. But the moment that you register for VAT, SARS will explain to you what your cycle is and when your submissions is due. So how it works is you've got 2 months period, 25 days. After the end of that period, you need to do your submission and pay the VAT over to SARS, and that would be the difference between the input and the output VAT that I've just explained. Remember, these videos are available on our website, so if you want to go back and rewatch this again to understand these things a little bit, you're more than welcome to do it. You can do it 100 times. But these are very important topics and things for you to understand. So the next thing that I would like to talk about is employer obligations. And unfortunately, there's quite a lot of them. So if you have one employee, it doesn't matter what type of job or what their salary is. If you've got one employee or more, all of these things that we're going to be discussing now is compulsory. So you need to register separately for pay as you earn. So you don't have that. It's not part of your income tax registration. Just like that, you need to register for it separately. So you need to register with SARS. What will happen is, once you register with SARS, you will get a pay-as-you-earn number, and you will get a UIF number. If your payroll is more than 500,000 Rand a year, you have to register for SDL as well. The moment that you've got that going, you also need to register separately with the Department of Labour for another UIF number. So you've got two UIF numbers at the end of the day. Now it sounds confusing, but that's just the way that this works. And then you also have to, it's compulsory, you need to register for COID, which is called the Compensation Fund at the end of the day. So let's have a look. So SDL, as I said, it's only applicable if it's 500,000 Rand or more your payroll. The pay as you earn, the UIF and the SDL submissions get done with what they call an EMP 201. And I know these are a lot of terms, but I think it's good to just at least know what they're all about. So EMP 201 is your monthly submission that you need to do, and it includes your pay as you earn, your SDL, and your UIF all together. But there's also a separate return called the UI19 that needs to go to the Department of Labour every month. Most payroll systems does this automatically or gives you the option to do that, but you need to ensure that the UI19 goes to the Department of Labour over and above the EMP 201 that you're doing every month. And then your COID or your compensation fund returns. So this is basically when somebody gets injured at your company or something happens to them, the Occupational Disease and Hazards Act, that's what it all comes down to. This is a submission that you need to do every year. If you've got other insurance, it does not take the obligation of registering with a compensation fund away. It is compulsory. You have to register for it and do your yearly returns for those as well. Another important thing that you also need to keep in mind is that if an employee's services are cancelled and they no longer work for your company, you need to supply them with a UI19 certificate and an IRP5 certificate. So what that basically entails is UI19 is the official document saying to the Department of Labour, this person no longer works at your company, and the IRP5 are all the totals of the pay as you earn and the STL that you've submitted throughout the year on a certificate to say what has already been paid and what has not been paid. Also, this time we are in tax season now. It just opened now on the 1st of July. The majority is going on the 1st of August. So employers need to supply their employees with IRP5 certificates so that they can submit their taxes and file their tax returns at the end of the day as well. So these are all the employer obligations, and as I said, the unfortunate thing is these things are not optional. They are really compulsory at the end of the day. So that brings me to my next topic, which is very, very important, and that is your record keeping. Record keeping is crucial. At the end of the day, it is compulsory to keep these records because you also need to, if you've got a company, you need to file annual returns with the CIPC. And as part of that returns, you need to provide them with financial set of accounts. You'll also need these financial set of accounts to do your ITR 14 at the end of the day. Very important to know is that South Africa, or the standard that we use in South Africa, in line with international regulations and international standards, is we use IFRS, which is the International Financial Regulation Standard that we use in accounting. So those are the format that your accounting and financial statements need to be to comply with the CIPC and with SARS. So the majority of SMMEs is also important to note. Smaller businesses do not have to be audited. A lot of people talk about audited financial statements synonymously with normal annual financial statements. If you're a small business and your public index score is less than 100, you don't have to be audited. You don't have to pay for auditors to do that. You still need an accountant to help you compile your statements, but it does not have to be independently audited. Just by doing a simple Google search at the end of the day, you can easily find a lot of public index score calculators that can help you calculate the public index score of your business. I cannot emphasize more than enough how important it is to get a good accountant on your side. We have established the first world's online digital accountant, and we make it affordable, efficient, and easy for people to comply with all these things that I've just mentioned to you. You are a business owner and you need to focus on your business at the end of the day, and that is why it's important to partner with a good accounting firm that can help you take care of all these things so that you can rest assured that you do not worry about these things. One thing that you should not do is do not let these things pile up. A lot of businesses go into business and say, I'll do this later. And that later never comes, and it ends up becoming a huge problem, causing a lot of debts. And that's why I always call this the silent killer of business. Make sure that your things are compliant, get it squared away, get it up to standard right from the beginning, and make sure that it's properly done by the right accountant. Remember, a good accountant or tax practitioner ends up paying themselves because the amount of money that they'll save you through stress and tax savings will actually cover their fees at the end of the day. So if you want to find out more about our services, if you don't have an accountant or you're not sure whether your accountant is doing all these things, you can go to our website www.osiden.com, have a look. You can sign up for our services. Very, very affordable, very effective, and easy to use. Thank you so much for watching Osiden Live. This was a nice and short one. Remember, if you've got questions, please leave your questions on the comments of these videos. What I'll be doing is I'll be responding to those comments and questions that you've got in person. You can also go to our website. There's quite a lot of information about compliance and stuff on our website as well. And remember, in 2 weeks' time, Thursday at 12 o'clock again, we're going to have another Poseidon Live broadcast, and we're going to be talking about a new topic to help you guys to build a better business and a more efficient business. If there's things that you would like us to discuss or topics that you would like us to address, leave those as comments in the videos as well, and we will be looking at those and addressing those questions and concerns. Thank you for tuning in. Have a great week.